Welcome to Markets Now. I'm Michelle Rook with agmarket.net's Matt Bennett. And let's talk just a little bit about the closes today. Corn and soybeans were up, wheat was lower. Corn surprised me because the wheat market usually drags it down. Do you think we're getting to the point where corn is able to put a low in here?
I mean, last time you and I talked, I thought wheat might drag corn out of the doldrums, so to speak. It certainly looked like that might be the case. But, you come in here today, obviously, wheat market's getting beat up. Some of this is what's going on in the EU. Some of the price action there has just been rough, been horrible. But you look at corn, and corn, I think people are getting a little bit of confidence that the low might be in. If the low is in, I think there's some bottom pickers, so to speak, want to go ahead and buy a little bit of corn. Can I get super bullish right now? Fundamentally, no. You're going to have some prolonged heat and dryness, in South America. You're going to have to throw some problems at that safrinha crop, and then you're going to have verification of maybe a little less corn acres. I do think there's some whispers of that currently, but at the same time, it remains to be seen. We're a long ways away from March 31st. Last thing is that we're hearing whispers of some Chinese business potentially off the P&W. And so if that's going on, obviously they're looking at this saying, gee whiz, how long can this market stay this low? RSI got down to about 20. You don't spend a lot of time that oversold in the corn market. Typically you get under 25, you start to correct that situation a little bit. And I think that they are very well aware of that as well. So if they're stepping in buying corn, I think that makes sense. And that could be something that could give us a little more support for more of a sustained rally.
It makes sense only to the point, though, that Brazil, if you look at a corn chart, they have seen their market just collapse here recently. Right. So why would China not buy from them? I
mean, that's a really good question. But when you look at FOB values, actually, we're quite competitive right now. And so I've got to think that, they could buy some off of them. But there's been several days here recently because I look at these FOB values on one of the sites that we look at, so with freight on board, several days here lately, we've actually been a little bit cheaper than Brazil. And so with that being the case, of course, some of that has to do with the fact that the dollar finally had backed off just a shade. And we were going up for quite a while, and we were a little bit concerned we were going to take off back towards those summer levels, 107s and stuff like that. But 103, I can live with. 104. Bottom line is, I think we're still competitive. You look at those values. I think China, they're going to buy a little bit off the P&W. I think it makes sense from a freight standpoint, especially with question marks with the Panama Canal still.
And we have first notice day tomorrow.
Yep.
We had lots of liquidation going into that. You'd think that would kind of be over, don't you think?
I do think that that's pretty much run its course. I think that last week a lot of folks were talking about, hey, we got first notice day coming up. What are you going to do with your corn? Are we going to roll? And I think some folks are like, look, this is pathetic. I'm out. I'm going to get out. Some people probably had some sort of re-ownership. I understand that. You've got to think that it makes sense, to buy. Calls are cheap. I mean, we all know that. Volatility's been just sucked out of this market. The sentiment for corn was about as weak as anything that you could trade. Actually, a couple of different indicators showed that it was the least popular of anything that you could trade in the commodities. And so in that case, you step in and maybe buy a little bit as you sell. Sometimes a producer has to have ownership in something to give them the confidence to go ahead and make that physical sale. That makes sense, because here's the thing, Michelle, if we do, let's say we take off on a 40-50 cent run, we're already halfway there. All right, if you do, it's extremely unlikely that you get that on your cash corn. Basis is going to weaken as people start to reward the market. The elevator systems can only handle so much corn. End users can only handle so much corn. They're going to have to widen that basis. This is something we've been talking about for a while. That's what's going to happen if you continue higher.
So soybeans made new contract lows before bouncing into the close today. Do you think that we're going to continue to see pressure there because there's talk of importation of beans coming into southeastern United States? We still have Brazil harvest going on.
Yeah, global arbitrage is going to be something we're going to see quite a bit moving forward. Bottom line, if you're in the Southeast and you can get beans from Brazil, I know a lot of people in the Midwest, people here at Commodity Classic are probably saying, that's a bunch of I don't like that. That's frustrating. But hey, if I'm a multinational company, I'm going to source my products where I can get them the cheapest. We hear about soybean oil coming into California. Bottom line, if Argentina can get, which that was the rumors, who's sending it there, if they can get it there cheaper than what we can, I mean, that's just the way it's going to work. And so, I think as far as soybeans go, you've got enough soybeans in the world. There's a lot of question marks, though. how big is the size of the Brazil crop? And I know we're farther along than we were 4 weeks ago, 5, 6 weeks ago. I don't feel like we know more about the actual size, though. You know, you hear anything from low 140s to low 150s right now, I think is kind of where you're at. And so even I guess if you get right in the middle of that, let's say you're 146, 147, 148, that's probably not low enough for us to get a fundamental reason to get excited about owning beans. And so I am concerned that there could be more downside pressure. Last thing I'll say on beans is that acreage is likely to be fairly strong on beans here in the U.S. this year. When you were making decisions last fall, corn worked better. And so I think it was unfortunate if you made that decision based upon economics, if you didn't lock some of that price in. Because now beans look better, but if you've already got your anhydrous on, you're going to plant corn. I think swing acres firmly go in the direction of soybeans this year. Whenever you look at the economics, especially in the I states, they look significantly better towards soybeans than what they do corn. And so I think you'll switch a few of those acres over, but I don't know that you'll get within 3 to 4 million between the two. Last year it was 11 though, so it's a big change.
The wheat market looked like it was trying to bottom until today when we saw these EU wheat prices, as you say, pull our market down. Is that going to continue to keep a lid on that ability of that market to form a low?
Yeah, I mean, to me, I feel like we're plenty cheap in the wheat market. I felt like last week the wheat market had a story to where we could get excited.
The Russian sanctions, maybe, or what?
Yeah, I mean, and so you've got to think that this wheat market's finally going to be able to kind of pull us along. We've seen it happen. You and I talked about this last week. Sometimes when corn, beans, and wheat are all in the doldrums, the wheat market will have something to propagate a rally, and it will drag the other two begrudgingly along and at least keep us from continue to make new lows. And then you come in here this week, and it's very concerning, in my opinion. And actually, it's shocking, as you, I think, insinuated, that the wheat market's doing what it's doing, and then corn turns around and rallies. I mean, it's abnormal. It could be spread unwinding. A lot of folks, I think, for some time, were long this wheat and short corn. I mean, there was just no reason to get excited about owning corn for quite some time. Still isn't, if we're going to be honest about it. It's just that we're extremely oversold. We've probably thrown all the bearish information we could throw at it. Wheat market's a little different. I think moving forward, you still got to understand that we continue to draw these domestic and global stocks down year on year. Any sort of supply disruption in the world could have a little bit bigger impact than what we've seen before, whenever we always had 50% stocks to use.
Yeah. Just a quick question about cattle. Pretty big sell-off today. Do you think it's part of a routine correction?
Well, I think cattle on feed last week was bearish. We know that.
Placements.
Okay, placements were bearish versus expectations. People thought they could be in the low 80s, or mid 80s, and we came in at 92, somewhere in there. But the bottom line on cattle is this: that was due to logistics, due to weather. And I felt like if you were in the 80s, this next month you would rebound, okay? And so I felt like the market wasn't going to do a whole lot this week, even though it was a bearish report. But the problem is, part of that was due to the fact I didn't think corn would rally 20 cents, off the lows this week. That certainly is going to have a little bit of an inhibiting factor on the cattle market. First of all. Second of all, equities have kind of sold off, so it looked like maybe we're going to take a run towards 40,000 on the Dow. Now you're trading back below 39. It's still a very elevated level, but anytime you start feeling like consumer confidence might be waning just a little bit, you've got to ask yourself, has this cattle market got the firepower that it needs, to push higher whenever you're already trading in the mid 180s? And I guess my personal opinion is right now, I think it's probably fairly priced.
Okay. Good to see you as always. Yep. Thanks so much, Matt Bennett, joining us with agmarket.net, and that's Markets Now.